All right, what's going on, guys? We're gonna pretty much go over top-down analysis. And before I begin, first and foremost, you need to know what kind of trader are you? Are you going to be a day trader, swing trader, so on and so forth? So, with that being said, I'm pretty much going to show you how to scalp and day trade. That's how I do my top-down analysis for that process. But if you are a swing trader, you want to go on the higher time frames, like the monthly and the weekly and the day, and then you do the same process I'm going to show you. So first and foremost, you must manage your risk. Like if you don't manage your risk, it's, for example, it's like you want to wash your car. You're not going to wash your car on the day it's raining. You're going to wait for a clear day. So you want to manage when you're getting in and out of trades. And by doing top down analysis, that keeps you from just jumping in trades. Because when you just jump in a trade, you're gambling. So we for top down analysis, we're going to start with our daily. And on your daily, you want to look for a trend. You want to see if you see any trends. And as you can see here on this one, we have an uptrend. So I'm going to make a zone. I'm going to put me some trend lines above and below. And that's going to give me a safe area, or a safe zone, I should say, for breaks and for a reverse or a change of whatever direction we have going on. So right now we have a slight bullish market, and it's, in other words, for if you don't know, that means uptrend. We have our 50 moving average, which is also supporting our uptrend, which is under all of our candlesticks. And we also have our 200 moving average, which is in support as well. So other things you want to look for besides your trend, I personally like to pull out the Fibonacci. And some people don't know how to use it. Some cases, the Fibonacci won't really do you any justice. Like, for example, this one is going up, and it's already broken this trend, this previous area, what I would have put my fib on. So this Fibonacci would really be pointless unless I'm looking for when it comes back in this area. So with that being said, I'm going to move my Fibonacci a little bit further back if I would use it on the daily, but I always like to use it to still kind of get a grasp of where we are. So I'm going to pull it here. And as you can see, it's already broken that fib as well. So in this play, the Fibonacci isn't going to really make any difference. So there are just certain, like, it's like a checklist almost that I have, or I guess I could create, but it's something I've done it so many times. It's like a mindset now. But I check to see if I can put a fib down to get myself see if I have a golden zone or anything of that nature. If the Fibonacci doesn't work, then I move on to see if I see any patterns. Do I see the W or head and shoulders, or do I see a wedge forming, so on and so forth. So right now, it's pretty much, it's a channel. We have a nice consolidating channel. It's above our 10 moving averages, again, our 50 moving average, as well as our 200. If I'm going too fast, please let me know. I'll slow down. I have my trend lines. So now that's pretty much it for my checklist for my daily. So now I'm going to move down to my 4 hour, because that's all I'm going to do for my draw up on my daily. Now on my 4 hour, some things you will repeat. For example, the Fibonacci, looking for the patterns and stuff like that. But on the 4 hour, first thing I'm going to start with now is looking for my supply and demand zones. Now we have a nice choppy market. You can change your candlestick pattern to the lines, and it gives you a little better reference on where the peaks and stuff actually were, because some people don't like to use wicks, but the wicks are just as well. It's price action, it's movement. That price went up to that point, so either way it's going to come back and retest that zone. So wicks matter. So when looking for support and resistance, if you don't have the mindset of using wicks, I recommend you using the lines. So right now we're going to check out the lines where we see constant hits. So we have constant resistance. We have 1, 2, 3, at least 4 hits right here in this area, and then it's going to turn around and become support. So that's a good reference for a line of support and resistance. So I'm gonna put that there. All right, so we have 1, 2, 3, pretty much it's respecting the area. It breaks, then it just support, support. Now, either this area is going to come back and be retested and it's going to break through, and more than likely it's going to be right here where it crosses this trend line. It's the craziest thing how a trend can be somewhat of showing you something that's going to happen in the future. So the trend is either going to be respected or broken. So now we're at the peak of this trend at the top. So more than likely we're going to turn around and boom, make our way down. I not predicting or anything, but that's what I would normally look for. I like to look for crosses and stuff like that. So that's the reason why I look for my supply and demand zones to see where it's been, where it's coming back to. Another tool you can use or indicator to find good supply and demand zones is the volume profile. That will also show you where a lot of where the bankers pretty much bought, and if there's any overbuying and stuff like that. You can also use, let's see, what your MACD, you can use your stochastic. So it's really your preference. If you know how to use those indicators, or if you want to learn, I'll teach you those as well. But I don't care to use them. I know how to use them, but it's real simple. Just finding the supply and demand zone where you got support and resistance. That's pretty much it. So now I'm going to move down. I have my nice little support and resistance there. I'm going to see if I can find a place to put my fib. I go back to my candlesticks. Oh, it's wrong ones. Okay. So back to my candlesticks. And now it's so choppy, you know, sometimes just like it was on the daily, the 4 hours usually really close to your daily. So it's, if you didn't use your fib on your daily, more than likely you're not going to use it on your 4 hour. You'll more than likely use it on your 1 hour and down, but you can pass on past that. So my next step on my checklist for my 4 hour would be patterns again. I'm going to look for patterns. I'm going to look for head and shoulders. I'm going to see if there's any constant, you know, back and forth of W movement, teacup candles. If you need, I have a I call it a cheat sheet, a pattern cheat sheet. I could share with you as well. It shows the common patterns that you get in your market, like whether it's forming a teacup or whether it's forming the W or whether it's forming your head and shoulders and stuff like that. So a lot of people don't like to use them, but it's good to know, you know, because patterns are, they repeat, you know, as you can see, you have a lot of choppiness, but it jumps, a lot of choppiness, but it jumps down. So it's a thing that repeats. So it's always good to look for patterns. So now moving on, my next step on the checklist for the 4 hour would be, where's my 50 moving average? My 50 moving average is always my green and red line, because when it's green, the market is above, red, the market is below. That's just a nice little rule of thumb, and also another help when you're just glancing at the market. So also, I check to see if the candlesticks are above or fully below. If it's above, then we have an uptrend. Or if the candlesticks are below, then we have a downtrend. That 50 moving average, if it's going inside of the candles in between, you have more, you about to get more consolidating of a market. So right now we're pushing to the uptrend, but at the same time, we're coming to the top again, the top of our zone, our trend lines. So that's something to look for. Either it's going to break or turn around. So it helps you get an idea of if you're going to trade in this zone or you're going to wait for the break of the zone. Some people, like me, for example, I like to trade in the zone. I have this zone that I drew from my daily, so I know I can get quite a few pips inside of the zone. So it doesn't hurt to trade up and down, but you don't want to really trade against the market if you are going to swing trade. If you're going to do big trades, don't trade against the market. Don't expect it to come down when clearly we have a bullish market. So you just want to stay with the trend. Now on the next